Good morning. Just going to quickly go through my portfolio update. This is episode 7 of my investment portfolio update. Just a quick bit of news, what's gone up, what's gone down this week, what I've sold, what I've brought. And then obviously a bit of news on the companies that I've brought into this week. First, let's just have a quick look into the stocks and shares ISA. Obviously, I've sold down my position in Distill this week. I was sitting on 100% profit, as you know from the previous updates. It was selling for about 240 a share. So I sold 50,000 units at 2.4 pence a share for £1,200. Obviously, my initial investment into Distill was only £1,200, so I've managed to double my money, and now I've just got 50,000 units of Distill holding, which is basically all capital gain. So I've got 50,000 units from my capital gains, and my initial capital's been pulled out of there now, and I've got a bit of cash sitting in my stocks and shares ISA, which I'm probably just going to build it up with a fund, with a global fund. I'm not sure what global fund I'm going to use yet, but I'm just going to build that up slowly, because it's not a very big portfolio in the stocks and shares ISA, so I'm going to just dollar cost average into a global fund every month into this one now, and obviously hopefully add some money into it later on in the year. And that's basically it for Distill this week. Then we'll have a look into the lifetime ISA. Fundsmith, not really done much this week still. It's just up and down, it just stayed flat really. That's my global fund in this portfolio. I'm looking to get it to dollar cost average to about £3,000, and then I'm happy with that, and I'll probably start. I'm also going to look into a new global fund that I'm going to dollar cost average into this month, just for, I don't want all my eggs in one fund really. Even though I think Terry Smith is a quality fund manager and he's got a good track record, I just don't want it all in there. Neil Woodford was a quality fund manager. I know their styles are completely different, but if you've invested all your money into Neil Woodford's funds, Woodford Income, you'd have lost a lot of money. Quickly now, the one I want to talk to him about the most this week is Boohoo. Boohoo, I've brought another £1,000 into Boohoo on basically just on the negative news that they had a Dubai conference, which was like, not following the foreign policy of COVID-19 rules and regulations, which it was, because it was business travel. It wasn't like, just go and have a party. But I just think it's all because, like, obviously they had the Leicester scandal, and and they've had so basically, if they fart now, the journalists are just going to be straight on them. Boohoo can't even move without, they can't make one false step without, it constantly being on them, journalists and stuff like that, and do-gooders. Basically, I don't think it's going to affect the overall business, this bit of news. It did knock the stock price down about 5% to about 224. And I brought another £1,000 worth of shares, and about 320 shares at roughly about, well, I can tell you, if we go into transactions, I brought another 332 shares at 327 a share. It's gone back to about 332 a share now, as you can see. So that's like, I'm just looking to build a position in that. I don't think it's going to affect the underlying business, and I think Boohoo is going to be worth a lot more in the future. If you look at companies like Hugo Boss, they used to make clothes for Hitler Youth, and people still buy Boss clothes now. Obviously, it's not a growing company anymore, but it's still around, isn't it? So I can't say, a lot of people are panicking about, institutional investors are panicking about these bits of negative news on Boohoo, but I don't think it affects the underlying business, and the future growth of the company still looks the same to me. And what they need to remember is the people that are buying from Boohoo, the customer base for Boohoo, they don't read The Guardian, they don't read the Daily Telegraph, they don't read the Daily Mail, and they're not interested. They just want to get their clothes cheap and quickly, and it's convenient and relatively fashionable. That's what they want. Obviously, it'd be nice in the perfect world for everything to run smoothly, and I can't defend Boohoo for the Leicester scandal. They should have known, and they should have been more aware of it. But I think they'll go forward, they'll rectify them issues. I just kind of think, like, that every little thing they do now is going to be penalised by the press and the media, and that could be potential buying opportunities into to boohoo stock. I have heard on the radio this morning that they've brought out Debenhams, which was went into administration just before Christmas, and obviously it's been struggling for years. I do know that they're not going to be saving any of the jobs in Debenhams. JD were looking at buying at Debenhams as well at one point, but they're not going to be saving any stores. They're not going to be saving any jobs in Debenhams. So I think that's going to be going to an online only retailer. It'd be interesting to see what the stock does on that news today, and if the stock price goes up or goes down, it'd be interesting to see. They have got a lot of cash, and they are debt light, the company are, and they are buying up brands to put in their portfolio. So it'd just be interesting to see how that pans out. AJ Bell's pretty much been up and down this week. It's had some good news, but an investor sold out of it. But I just think that's really, they're just freeing up some shares for institutional investors. I think that's a long-term holding, pretty safe holding. Obviously, Distill done exactly the same in this portfolio as I did in the previous portfolio, and to be fair, it has dipped back down to 2.2 pence a share. So I would have lost £400 on that stock this week, whereas I've just lost £200 on the stock this week. And if it goes down any more, back down to like 1.2 pence, I'll buy in with the capital that I've took out of it, and then I'll have even more than 200,000 shares that I originally had. That's the plan. And if not, I could just ride it as a big winner, and obviously not worry about it because it's all capital gains that I've got invested. Same with Greggs. It's up about 10% this week, which is great. So it's had some good news, I think, this week. Let's just quick look. Sales decline slowing, basically. That's the forecast 15 million loss, and sales decline slow. So that's good news, really. It just means they're getting back on track. I won't go through the article, but that's why it's gone up about 10% this week. JD's pretty much not really done much either this week, and obviously it's not been great for retail's data this week. So it just potentially, hopefully, be more of a chance to build up a bigger position over time if the price stays around about where it is, because it is still one for the future. The 10-year outlook on JD is quite bright, and hopefully they're improving their online systems to get deliveries out to people. And obviously, I've still got Legal & General in there. That's just pretty much, it's a cyclical stock. It's linked to the economy. I just done that as a real value bet last year and brought it in at real cheap prices. And I made a decent amount of money on it, but that's all purely capital gain. I've got invested in Legal & General now. I had a 10% dividend yield, so it'll give me £50 each year. For the time being, I'm quite happy with that. So that's the portfolio as it stands. Be interested to see in next week's update how boohoo's fared after the news of being brought out by Debenhams, and where my position, if my position's up, if my position's down in it. I do think it's a good long-term growth stock for the company, with lots of global expansion coming. So that the upside outweighs the downside in my view on this company. And I do like the products, to be fair, and it's quite an easy app to use. Also, the big thing with Boohoo and JD and places like that is they use these apps called like Klarna, ClearPay, and you can pay segments, so you can pay. It's a bit like Bright House, how you used to go and buy a TV, and but for people that haven't got a lot of money, they will be doing this, and it's still revenue for these companies. Boohoo gets the money as soon as the item's sold. So these are a lot of fintechy apps. They're like PayPal, but you pay in instalments. So if you want to buy a £100 hoodie, you might pay £40 on one payday, £40 the next day, and £40. So you end up paying £120, but you can cut your instalments down into 3 segments. So I just think that's good for the actual companies, especially an online retailer like Boohoo. It's a big sales point to sell their clothes. And that's basically it for the portfolio this week. I've still got like 10 grand of cash in there. I've increased my position in Boohoo. I just thought it as a buying opportunity. I thought the company's not changed, it's cheaper. I was happy to buy it at £3.50, so why not buy it at £3.27 or whatever I bought it at. I have been researching a new quality stock this last week. It's not a UK stock, but I am really tempted to put it into my portfolio. And I will be talking more about it next week, because I'm thinking about making a small block 5% position in this company, well, 5% of my portfolio into this company next week. And obviously we'll be discussing why I've done that and my thoughts behind the stock next week. If you've enjoyed this video and you want future updates, and I'll be trying to do weekly updates every Monday now. If you enjoyed this video, could you please like it? If you want to see future updates, can you please subscribe to the channel and hit the notification bell, because that'll let you know when the new videos have dropped. Hope you all have a good day. Till next week.